have probably heard the term scalable business model. But what does it really mean and why it is so important? In simple terms, a scalable business model is one that can grow without significantly increasing costs. Imagine you are able to double or even triple your revenue, but the expenses don't increase in the same proportion. Sound great, right? That's the power of scalability. Today, I'm going to guide you through the steps to create a business model that is not only scalable, but also sustainable for long-term growth. So let's dive in. This is what we will see today. First, define your market. Again, build a simple yet effective solution. Automate and optimize processes. Build a team for growth. And last, plan for financial growth. All of these, of course, after our intro. So let's start with the first topic. Define your market. Defining your market is the first and perhaps most crucial step in building a scalable business model. Without a clear understanding of the market you are operating in, you won't be able to identify the true growth potential of your business. In this section, we will dive into how to define your market, understand your audience, and find your competitive position. First topic is market research. Market research is essential to gather accurate and up-to-date information about your industry, your customers, and your competitors. Without this data, you can make informed decisions. Here are the key steps for effective market research. Start by understanding the industry your business operates in and whether it's growing or declining. Market demand can depend on various factors, such as economic trends, technological changes, or social behaviors. Understanding the industry landscape will help you decide if your business has room to grow. Segment the market. Not all customers are the same. You need to segment the market based on different criteria such as age, geographic location, buying behavior, or specific needs. For example, if you are selling health products, you might segment the market based on people interested in nutrition, disease prevention, or specific health issues. Then identify demand and growth potential. You need to identify if there is actual demand for the product or services you offer. Use market data to estimate the growth potential of your market segment. If demand is increasing, your business model has greater scalability potential. You can gather this information through market surveys, industry reports, or by analyzing online behavior. Evaluate competitors. Who are your main competitors? Analyzing competitors helps you understand how they position themselves in the market, what their strengths and weaknesses are, and how you can differentiate yourself. Study their market strategies, pricing, product quality, and customer service to identify opportunities for improvement. Then, focus on the customers. Once you have completed market research, the next step is to focus on the ideal customer. Without deeply understanding your customers, you won't be able to create a product or service that effectively meets their needs. So identify the problem you are solving. Every successful business is built around solving a problem for its customers. You need to have a clear understanding of what problem you are solving and how your product or service offers a unique solution. The key is to address the specific needs, desires, and pain points of your customers. Know your ideal customer. Create a detailed customer profile by a persona. This persona should be based on the real data or market segments you are identified during your research. Define who they are, what they do, their buying habits, and their motivation. The more detailed your profile is, the more effective your offering will be. Analyze customer behaviors. Customer behavior insights are crucial to understanding how they buy and what motivates them to make a purchase. Use data analytics, surveys, reviews, and social media interaction to gather direct feedback and adjust your product to meet the actual needs of the customer. Stand out from competition. To scale, it is not enough to simply meet customer needs. You need to do it better than your competitors. Understand how you can add value that your competitors don't offer, or how you can provide a better customer experience. This will help you build a strong and loyal brand. And then we have market positioning. Market positioning is how you differentiate yourself in the eyes of your audience. Once you have defined your market and understood your ideal customer, the next step is to figure out how to position yourself against the competition. And we have again value proposition. Your value proposition is the promise you make to your customers about what they will get when they buy your product or service. A clear and compelling value proposition is crucial to attracting customers and building trust. It should answer the question, why should a customer choose you over someone else? Last point is differentiation. Differentiating from your competition is a critical aspect of scalability. You could do this by offering a unique, innovative product or service with better quality or a more attractive price point. Think about how you can add value that is not easily found in the market. Brand identity. Build a strong brand identity that resonates with your audience. Consistency in your brand messaging, design, mission, and values is key to building a trusting and loyal relationship with your customers. Measuring market potential. Finally, to build a scalable business, you need to measure how large and sustainable your market growth potential is. Some key indicators to track include industry growth rate. How fast is the industry you operate in growing? If the market is expanding, you have many more opportunities to scale rapidly. Revenue potential. Estimate how much revenue you can generate based on market demand and product pricing. This data will help you determine long-term growth potential. Feedback and sustainability. Collect feedback from the market and analyze whether there is sustained demand over time. Scalability requires demand that persists in the long run. So, as a conclusion, defining your market isn't just about research, it's about deeply understanding your customers, finding a unique positioning, and measuring how big and sustainable the market can grow. Once you have a clear vision of those aspects, you can build a solid foundation for your scalable business model. And now our second point. Build a simple yet effective solution. After defining your market and understanding customer needs, the next step is to develop a simple yet effective solution. This doesn't mean creating a perfect product right away, but focusing on solving the customer problem with minimal resources. Repeat, minimal resources. Simplicity is the key to scaling effectively. First test is prototype and a minimum viable product. The minimum viable product is a basic version of your product with just enough features to solve the core problem for your customers. It allows you to test your idea with minimal investment and gather real-world feedback. Why a minimum viable product is important? A minimum viable product helps you avoid spending too much on product that might not meet market needs. It allows for quick validation and iteration. For example, if you are building a fitness app, your minimum viable product may only track basic workouts rather than include advanced features like nutrition tracking. After releasing your minimum viable product, gather feedback from your customer and use it to improve the product. An iterative approach means your product evolves based on real user input, making it more likely to succeed. The best way to get feedback is naturally asking questions to your customers. Ask what's working, what's not, This feedback will help you refine and optimize your product. Focus on creating a simple, intuitive design. Easier it is for users to navigate, the more likely they are engaged and adapt to your product. Use-centered design. Your product should meet the needs of your customers. Prioritize user experience and design with simplicity in mind. Focus on value and core functionality. Even if your product is simple, you should deliver significant value. So don't overload your product with unnecessary features, but rather focus on solving the key problem effectively and avoid feature creep. Keep the product focused on what is essential. Adding too many features can dilute its effectiveness and confuse users. And now some scalability considerations. Choose technologies that will allow your product to grow without issues. For example, ensure your software can handle more users as your business expands, and plan for scaling not just the product but also, and maybe more important, your business processes and customer support. Automate and optimize processes. As your business grows, efficiency becomes increasingly important. One of the best ways to scale without overwhelming your resources is by automating key business processes. This allows you to maintain quality while handling a higher volume of operations. Here is how you can do it. First, identify repetitive tasks to automate. These are the processes that benefit most from automation. Customer support. Automating responses to frequently asked questions or using chatbots to handle basic queries can save a lot of time for your customer service team. Sales and marketing. Automate email marketing campaigns and follow-up emails. Tools like MailChimp, HubSpot, ActiveCampaign allow you to set up automated workflows to reach prospects at the right time with the right message. Accounting and invoicing. Software like QuickBooks or Xero can help automate invoicing, financial tracking, and payroll, reducing the chance of errors and saving time. Another important point: inventory management. Automation tools can track inventory levels and reorder supplies when necessary, minimizing manual checks and stockouts. Another important point is scalable software. Investing in the right software tools can make a huge difference in how your business runs as it scales. Scalable software solutions are those that grow with your business, handling increased workload without needing a full overhaul. Here's how to approach it: customer relationship manager systems, project management tools, and cloud-based systems. Once you have automated basic processes, it is time to look for ways to increase operational efficiency across the business. Here are a few areas to focus on. Supply chain optimization. Review your suppliers, delivery times, and inventory practices. By optimizing your supply chain, you reduce lead times, improve product availability, and lower operational costs. Data-driven decision-making. Use data analytics to track key performance indicators, KPIs, and make more informed decisions. This may include customer behavior, sales trends, and operational bottlenecks. Tools like Google Analytics help you assess real-time data to adjust business strategies quickly. And then we have customer feedback loops. Continuously gather feedback from customers and use this information to streamline your processes. Automatic feedback requests through surveys or follow-up after purchase ensures you are always in tune with customer needs. And then create efficient communication channels. Maintaining clear communication becomes more challenging. By automating communication channels, you can ensure that everyone is aligned and that information flows smoothly. For internal communication, tools like Slack or Microsoft Teams allow you to create specific channels for different teams or projects. these tools can also be integrated with automation tools to send alerts or reminders for important tasks or deadlines. And for external communication like customer communication, automating email confirmation, shipping notifications, and other customer updates help reduce the need for manual communication, ensuring customers stay informed at every step of their journey. And then we have collaboration tools. For teams working remotely or across different locations, platforms like Google Drive allow team members to access necessary documents in real time. And then we have monitor and refine automated systems. Automation is not a one and done process. To ensure your automated system continue to run efficiently, you need to monitor and refine them regularly. Look for opportunities to improve automation by, for example, reviewing analytics, testing new tools, and adjusting workflows. As your business case, one of the most important factors for sustained success is your team. Strong, motivated team can help drive your business forward, implement strategy efficiently, and adapt quickly to new challenges. Building the right team for growth requires both thoughtful hiring and creating a supporting work environment that encourages innovation and collaboration. First step to do that is identifying key roles and hiring the right people. When scaling, it is crucial to hire for roles that will help your business grow efficiently and effectively. Start by identifying the key roles that your team needs to function at a higher capacity. This might include positions in sales, marketing, customer support, operations, or technology, depending on the nature of your business. Core team members. As your business expands, the foundation of your team should be strong. Hire for key leadership roles, such as managers or directors, who can take on responsibility and help scale operations. Skills for scaling. Look for team members with the skills needed to support your business as it grows. For example, if you are expanding into new markets, you may need a marketing manager with international experience. Or if you are leveraging new technologies, an experienced developer or IT specialist might be necessary to build the technical infrastructure. Pay attention on cultural fit. Beyond the skills and experience, consider cultural fit when hiring. A team that shares the same values and vision for the company is essential, especially during periods of growth. As your business scales, continuous training and development for your team become more important than ever. Thus, providing opportunities for growth within your organization ensure that your employees remain engaged, skilled, and aligned with the company's long-term goals. And again, establishing a positive company culture. Your company culture plays a significant role in your team's success. As you scale, maintaining and nurturing a positive culture is essential for employees' satisfaction, collaboration, and invention. Building cross-functional teams. As your team expands, it is important to break down silos and foster cross-functional collaboration. Having employees from different departments work together will allow you to tackle problems from various perspectives, speeding up decision-making and fostering innovation. Scaling leadership. As your team grows, the need for effective leadership becomes even more critical. Leaders must be able to guide the team, manage large projects, and inspire others to perform at their best. Scaling leadership is a process that involves hiring, developing, and retaining leaders who can support your company's vision as it grows. The last point is plan for financial growth. As your business scales, managing financial growth becomes even more critical. To ensure your expansion is sustainable, you need to have a solid financial strategy in place. This involves understanding how to manage both short-term cash flow and long-term financial planning, while ensuring that your business has the resources needed to fuel its growth. Build a financial forecast. A Financial forecast helps you estimate future revenues, costs, and profitability over a defined period, usually 1 to 5 years. It serves as a roadmap to guide your business decisions and maybe attracts potential investors or lenders. Here is what to include in your financial forecast. First, revenue projections. Start by estimating your revenue streams. Base this on realistic assumptions about sales growth, average transaction value, customer acquisition rates, and so on. Consider different scenarios. Best, worst to account for uncertainty. And then we have cost projections. Forecast your operating costs, such as salaries, rent, utilities, and materials. Include both fixed costs, don't change with sales volume, and variable costs, those that fluctuate with sales. As you scale, variable costs tend to rise, so managing them efficiently becomes more and more important. Another point to pay attention to is profit margin. Gross profit margin and net profit margin help you assess how much profit you are making relative to sales. Keeping this margin healthy is critical when scaling your business. And break-even analysis. Calculate your break-even point, the sales level at which your revenue equals your expenses. This is crucial for understanding when your business will start to become profitable, which is especially important when managing cash flow during the early stages of scaling. Determine funding needs. Scaling a business often requires external funding to support growth initiatives, whether it is expanding product lines, hiring more staff, or entering new markets. Understanding how much capital you need and where it will come from is crucial. Identify your capital needs. Assess the specific needs for capital. For example, do you need funding for hiring, equipment, marketing, or international expansions? Determine how much you will need over the short and medium term. Explore funding options. There are several ways to secure funding for growth. The first is, of course, equity financing. You can raise money by selling shares of your company to investors. This could be through venture capital, business angel investors, or crowdfunding. Second way is debt financing. Taking out loans or lines of credit from banks, other financial institutions, but pay attention, ensure that you understand the terms and the risk associated with taking on debt. Last ways are government grants and incentives. Explore available grants, tax credits, and other incentives for business looking to expand. Prepare a business plan for investors. When seeking funding, having a well-prepared business plan and pitch deck is essential. Your plan should outline your financial forecast, business goals, and how you intend to use the funding. As you scale, it is essential to ensure that your costs are manageable. Scaling too quickly without managing costs effectively can lead to cash flow issues and reduce profitability. Pay attention, long-term profitability and sustainability are key to scaling successfully. In the early stages of scaling, it's easy to focus on growth at all costs, but maintaining healthy profit margins and ensuring the business remains financially sustainable is essential. Scaling a business is a journey that requires strategy planning, smart investments, and the right team. So now that you have a roadmap to scaling your business, it's time to take action. Start by implementing the strategies, whether it is defining your market, optimizing processes, or managing your finances. And don't wait for the perfect moment. Start today and keep refining your approach as you grow. If you found this video helpful, be sure to like, subscribe, and leave a comment with your thoughts or questions. I would love to hear how you are applying the strategies in your own business. Let me know if you need anything else. See you next week.